So what this means is that for the last time period, the bulls were in control. That's here. The bulls were in control of the price action, and which could indicate or which could mean that we're heading higher. So that's one. Second, we'll be looking at another one. It's called yes. Yeah, I think here we have a lot of them. So we have another one. It's called the bearish engulfing candle, which is the opposite of the first one I talked about. So here, at this point, where the cursor is now, this last circle here. So we have an engulfing candle here. This candle here at about 16:30 here, and the next candle was about 17:00 here. This candle completely engulfs the previous one. That means it closes below the low of the previous one. That is an engulfing candle. So it means that price will continue, or price will most likely continue downwards because there is a momentum to the downside. So here, up here, we have another candlestick formation. Now this is a three candlestick pattern. It's called some people call it different names. Some call it the harami, some call it the morning star, but me, I prefer calling it the morning star. So we are in an uptrend, price is going higher, then we pause. After we pause, we see this candle here at this top here, at the top here. This candle is called a doji. Well, you can call it a spinning top. Please don't be so hooked up with the names. Just understand what they mean. So this one here is a doji, and we see another candle after that doji that completely closes more than 50% of the previous candle. Well, I hope I'm not sounding too confusing, but just go with me. So now look at this candle here. I think it's even better I use the arrow. So now we are in an uptrend. Price was going higher. Then we saw this candlestick pattern here. What this candle means is that price tried. That's where the arrow is pointing now. Price tried to move higher. Then for whatever reason, we came back down and closed near the open. This is an indication that price is not willing to go any higher. Sometimes you might take a trade just because of this candlestick pattern, but which is this candlestick pattern is risky though, it's high risk, but at least you will get into most trades early. So that's that about that. But that's a doji hammer. It's an indecision hammer. Price tried to go higher, and the sellers came in and they brought price downwards. So that's what that candle means. Then the next candle that followed it closed more than 50% of this candle here. This is a sign that the bulls have lost control, and now they considered defeat to the bears, meaning the price will go down. Now let me show you again. We saw here at this point the candle is pointing. We saw that when an uptrend, price was going higher all through this point. Price was going higher. Then it got to this point. Then we had this doji at the top. At this point here, if you were not already in the trade and you're waiting, then you had another. This would be like your confirmation that chances are we're heading downwards. Now, if you look closely, we saw something similar at this box also. We're also in an uptrend. And price gave us this same candlestick pattern, which is the evening star. That is, price will be in an uptrend, and we see a doji or a rejection to the upside, and we see a close. The next candle closes about 50% below the 50% of the previous two candles, which this one did successfully. Now, if you look here, we saw something similar. That's why I don't trade the candlestick patterns as they come. I incorporate other flow into it. So if I'm seeing this on the 30 minutes time frame, I'll if I'm to take the trade, I'll go down to a 15-minute time frame to look at what is happening and to see where the order flow is changing towards. If I'm looking to sell, I want to see that the order flow is breaking towards the downside. I will show you why this one in this box did not work and why this one in the upper circle worked. So now if you look at it carefully, let me zoom out. If you look at it carefully, they are basically the same thing. We saw price in an uptrend. We saw a doji here, and price dropped. Ideally, you can sell here in anticipation of price coming down, but you'd have been stopped out for a loss. And you look at this. If you look at the upper one here, they're basically the same thing. So why did this one work and this one not work? Now this is how I trade using the candlestick patterns. I go down to the 50. If I'm seeing it on the 30-minute time frame, I go down to the 15-minute time frame and look at what's happening in the box. Now, if you look at this, that is the box we are seeing. If I were to draw our order flow, you see that the order flow all through this point, it did not change to the downside. This was the point. That was the point. It started to go down. The next point was here at this point. You see, there was no order flow change to the downside. Whereas on the upper circle, we had here as a level, the price started to go down. But the initial level was, let me see if I can get down that side last time. Okay, I think I got it. Now the initial level was down here. Yes, I think I got it. Yes. So as you can see now, I'm interested in selling. So I want to see the order flow break to the downside. So even though I've seen that on the 30-minute time frame that is looking like an evening star and chances that we're going lower, I just come here and come down to the 15-minute time frame and wait for price to break this downside, which price did here, and from there onwards it just continued falling with little to no retracement. So that is how you trade with the candlestick patterns. You don't just enter a trade because of you're seeing a candlestick pattern on a time frame. I would try to incorporate the order flow into it. So now basically we've talked about 3 candlestick patterns. Basically we've talked about one, the evening star, which is price will be in an uptrend, and that's this one here. Price will be in an uptrend. We have an up bar followed by an indecision bar, then followed by the third bar, which is going to close about 50% below the up bar, the up candle. So that's one. Then secondly, we talked about the engulfing candle. So here also at this point here, this is also an engulfing candle. This is an engulfing candle. This is a bearish engulfing candle. The engulfing means it completely closes below the low of the previous candle. So which means that if it's a bearish engulfing candle, which means that price is likely to move downwards. If it's a bullish engulfing candle, it means prices is likely to go upwards. So you can apply the same sense to the engulfing candle. So if price is breaking to the upside or to the downside, you can go down to the lower time frame and see how the order flow is changing, so you can partake of the trade. So we've talked about the engulfing candle and the evening star or the harami. Please don't get so hooked up with the name. So all what you just need is what you are seeing and what it means. So we're going to move on. We're going to go to, look at another one. It's called the hammer. I think this chart has basically all of them. Let me delete some things so to be easier to see. Come in just a minute, please. Second. All right, now. So we've talked about this candle pattern, this candle. Come, let me delete all these other ones. Yes. So now we're going to talk about this candle pattern, this one here, the only one with the arrow. Okay. Now this candle pattern is quite frequent. It happens a lot. This candle pattern here. It's called the doji or the indecision candle. Price mostly it occurs at the end of a trend, be it an uptrend or a downtrend. So this is what happens. Price will be in an uptrend and price will be seeking to go higher. Then for that time period, price will close down low, very close to the open, or sometimes it even closes at the open. So it means for that time period, nobody was in control of the market. The bulls were not in control, the bears were not in control. So price closed at the open of the candle. So that's what happened here. And most times, if you're in an uptrend and you see this, chances are there might be price might retrace down or come back down. It's not how do I put it? It's not definite that anytime once you see it, it means that price will come down. There are sometimes you see it and price will still continue to move up. So which the order flow, which you can use the order flow from lower time frames, be the 15-minute or the 5-minute time frame, to enter into the trade. So which means you are not entering the trade blindly. You are looking at what is happening on the higher time frame. So that is another candlestick pattern. It's called the doji. Then also we have another one down here. That is this one here. This candlestick pattern here. This candlestick pattern here. This one here where the arrow is. Where the arrow is here. Yeah, now this is called the hammer. This is called the hammer. What is the hammer? Hammer is we have the hammer and we have the inverted hammer. So hammer is formed when media price is in an uptrend or a downtrend, of which price tried to move lower or higher, and it changed. In this case, this is a hammer. Price dropped, and it came here. It dropped. It tried going lower, but no. Instead, it closed. Close to the open of the candle. So and which formed this pattern. This is the hammer. Here at this point here, this is the hammer. Where the arrow is, that's a hammer. So it's an indication of price rejection to the downside, of which price is intending to go higher. So now, like I said, it's not a guarantee that once you see these candlestick formations, you just jump into the trade. If you are interested in trading them, I would suggest you go down to the lower time frames, be the 5-minute or the 15-minute time frame, and you look for order flow changes to that direction with which you intend to take the trade. So that is what a hammer is. It can also be an inverted hammer. It will look like something like this one here, like this one here. This is an inverted hammer. At this point here, this one here. Let me see if I can move the arrow to that place. Oh, I'm coming. I messed that up. Yeah, I think I got it. So that's an inverted hammer where the arrow is pointing. So price tries to move higher, then it came down, it closed. Although it's not so perfect, but it closed lower. So leaving us this week to the upside. You see what I said? It's not that once you see it, you enter the trade to the downside. The next candle price continue to move higher. So if you want to trade this candlestick patterns, you go down to the lower time frames. If you are seeing it on the 1 hour, you can scroll down to the 15 minutes to see order flow changes to that direction. Or if you're seeing it on the 4 hour, you can go down to the 15 minutes to the 30 minutes or even to the 5 minutes time frame, looking for order flow changes to that direction which you intend. So what this is supposed to mean is that price wants to go higher or is seeking higher prices, but for whatever reason it closed down, it closed close to the open of that candle. So that's the third candlestick pattern. The first candlestick pattern we're looking at, we talked of, is the engulfing candle, which is this one here. This one here is the engulfing candle. The second one is the evening star, where price will be in an uptrend, and the evening star, which is here. I think I should use the arrow, which is this one here. This one here, where price will be in an uptrend, and we'll see a rejection to the upside, and we see another candle, the next candle closing more than 50% of the up candle. So that is what an evening star looks like. The reverse is the opposite for an uptrend. So for example, if price is dropping, I think I have that somewhere. We didn't see that today, but okay, I think, let me see if I can show you that. I think I saw that on the 26th, if I'm not mistaken. Yeah, I think this is it. So price was dropping. Then we saw here at this point, here, where the arrow is. Sorry. At this point, where the arrow is here. So price was dropping all the while. Then we saw this rejection to the downside. Then the next candle that preceded that candle. Sorry about that. Let me see if I can get that back. Okay. Now sorry. So we saw this price was heading downwards. We might say is in a downtrend. Then we saw this this candlestick pattern here. Price was in a downtrend. Then price dropped. The next candle we saw price rejection to the downside. So it meant that price was no longer interested in the downside at this point. At this point, where the arrow is now, at this point, price was no longer interested in the downside. Then the next candle we saw price close more than 50% of the down candle. So which means that the trend has likely changed and we're heading upwards. So if you want to take this trade and partake in this up move, the whole up move that happened, or that happened after it, you can go down to, this is on the 26th of April, 6:30 a.m. So we can go down to the 15 minutes and look at what happened on the 26th of April. 26th of April. Yeah. So on the 15-minute time frame, this is what we're seeing. This circle is the box. So we look at other flow changes to the upside, of which we had, I think this is it. So at this point, let me see if I can mark it. So you see it. So if you're interested in buying, so you wait so that this point will break to the upside, of which we had the break here, and we're even lucky enough to come get a retest here. We broke that level here. We came back, got a retest, and from there, price moved over 100 points. So that is how you trade the candlestick patterns. So that is one. The engulfing candle, which is also something like this that I'm looking at, which means it completely engulfs or closes higher or below the previous candle. That's one. For bearish, it closes below. For bullish, it closes above. That's one. Two, we have the evening star. The evening star, which is this one that the arrow is pointing now, where price will be in an uptrend and we'll see a rejection to the upside. And the next candle after that rejection, it's a down candle to the downside. So we can go down to the lower time frame to see other flow changes to that side and take a trade to the downside. So I think that's all for candlestick patterns. We'll be looking at just basically we'll be looking at price rejection to the upside and price rejection to the downside. So, and that's just basically it. For here, what I mean by price rejection, this is what I mean by price rejection. Price is in an uptrend, and it tries to go higher. It comes back down and closes close to the open of that candle. which is something that happened around, which is something that happened here at this point here, at this topmost point here. That's one. That's price. That is the price rejection. It's also happened at this point. This is also a price rejection. So when I'm saying price rejection, that's what I mean. Price tries to go higher, and it comes back lower. So those are basically the candlestick patterns that I trade. The engulfing candle, the evening star or morning star. This is an example of the evening star. The evening star is prices in an uptrend, and we see a rejection week to the upside, which means price is no longer interested in going higher. And we see the next candle after the rejection week is the down candle. So we'll go down to the lower time frame and look for other flow changes to that side. So the reverse is the case for a morning star. So price will be in a downtrend. We see rejection to the downside, and the next candle preceding the rejection will be an up candle. So we'll scroll down to the lower time frame and see and follow other flow changes to the upside. Then the doji candle, the indecision candle, and the hammer candle. So basically that's all. I don't want to get myself, because there are over 1,000 candlestick patterns that one can look at, and so it will be too confusing. So just keep it simple. All right. So thank you very much. Now next video we'll be looking at introducing some indicators to our charts, making it a little messy. All right. Thank you very much.